As per a recent study by Spiva, more than 50% of all actively managed funds have not been able to beat their benchmarks. How at HDFC AMC do you address this problem?
Few years back, where the rally in the stock market was very concentrated, but over the last couple of years, many of the funds I think have caught up on that performance.
Sectoral and thematic funds, should they form a part of any investor's long-term portfolio?
The large part of the investor's portfolio should be in diversified.
Which are some sunrise sectors that HDFC AMC is betting on, which you are personally very bullish about?
The way I would answer this is that
today we have Mr. Navneet Munot, the MD and CEO of HDFC AMC. The HDFC AMC manages over 8 lakh crores in assets, which makes it one among India's top AMCs. Navneet has over 25 years of experience in the industry. He joined HDFC AMC in 2021 after serving for more than 12 years as the CIO at SBI Mutual Fund. Earlier, he was an executive director at Morgan Stanley Investment Management and held leadership roles across various BFSI companies of the Birla Group. In this episode, we will discuss about various financial products, industry changes, wealth creation through disciplined investing, and the debate between active and passive strategies. Let's hear it from him. Hi sir, welcome to our Speaking with Stalwart show, and thank you so much for being here. It's a pleasure and I'm really excited for the conversation.
My pleasure, Karan. Looking forward to it. Thank you.
Thank you. So beginning with the latest, hottest question that is in the market right now, what is your take on the Jane Street order? How is it going to impact the markets?
I didn't know that's the hottest, but from an investor's perspective, I think what SEBI has been saying for some time and has produced data that a large number of individual investors lose money in F&O. I think that's the message I would kind of reinforce again, that almost 89 or 90% plus investors lose money by playing in the F&O market. I think the better way of investing is disciplined investing, by investing through mutual funds, doing an SIP, remaining disciplined rather than trying these things. SEBI is looking into that specific matter. I wouldn't comment on that, but I think the message is very loud for the individual investors that that's not the market where you can create wealth over a long term. The best way to create wealth, which I keep reiterating always, is sound investment plus time plus patience, and never forget that.
Interesting. Do you think the regulator or the government should be taking actions against this proliferation of F&O for retail traders, because they have lost 2.9 lakh crores in the last 4 years?
I think that is what the chairperson has mentioned. SEBI chairman has mentioned recently. They are looking into it. They need to ensure that our markets are liquid, our markets are fair, our markets are transparent, our markets are the most technologically advanced markets, the best regulated markets in the world. And at any point in time, if there is anything that they need to correct, I'm sure SEBI would do it. And one of the primary objectives for SEBI has always been in investor protection. And I'm sure they won't leave any stone unturned to ensure that investors' interests are always protected, markets grow in a fair, transparent manner, and I'm sure they will keep taking all the steps.
As per a recent study by Spiva, more than 50% of all actively managed funds have not been able to beat their benchmarks. How at HDFC AMC do you address this problem?
So truth has several dimensions, many ways to look at it. There was a certain period few years back where the rally in the stock market was very concentrated. If you remember, there were 5 or 10 stocks which accounted for the entire Nifty performance, and that dragged down the performance of the actively managed funds who have a more diversified portfolio. But over the last couple of years, many of the funds I think have caught up on that performance. Talking specifically about the HDFC AMC, The data that I can give you is that we have more than 12 or 13 funds which have been in existence for over 15 years. We have more than 12, 13 funds which have been in existence for over 15 years. Several of them have been in existence for over 20 years. Some of our funds are as old as 30 years in existence, and all of them have track record of delivering alpha over a long period of time. So we have a track record going back 15, 20, 25, 30 years of delivering alpha. So the fund house has worked very hard. Credit to our team, credit to our processes, credit to our risk management, credit to our governance, and many of those things to ensure that we deliver value to our investors. And several of these funds have alpha as high as 5, 6 or 7% per annum going back decades. Another data point I would give you is if I look at the percentage of the equity AUM that's outperforming the benchmark over, let's say, a 3 or 5 year, because some investor might ask that you're talking about 15, 20 years, what about the recent periods? Last 3 and 5 years, I think over 90% of our equity AUM is outperforming as of the end of last data I remember is the May 25. 90% plus AUM is outperforming the respective benchmark. A lot of hard work has been done, but at the same time, I think it's up to the investors to look for the fund house, look for the processes, look for the fund philosophy, look for the long-term track record of a fund before investing. I've always believed India gives a lot of opportunity to the fund houses who have put the people, processes, risk management in place to generate alpha. You have a time arbitrage, which means that we can take a longer term view on the market or on the stock than several of the other investors who react to a news in the short run. We have a research arbitrage, which means that we go a lot deeper in researching the stocks that we own. So there is huge time arbitrage and there is a research arbitrage that we capitalize on. And I think if you put the right resources, if you have clarity of the mandate, if you have robust research, if you have robust portfolio construction and the right kind of governance, I think if you put all of that together, there is tremendous opportunity for generating alpha, which is what we have been doing for going back into decades. There's another interesting data you should look at whenever you look at some of these reports of the number of funds outperforming. You should look at the AUM that is outperforming, and actually be positively surprised by looking at that the percentage of the AUM in each category outperforming is higher than the percentage of funds that are outperforming, which means that investors are also smart. They are betting on funds which have a longer term track record in terms of delivering alpha, and those funds have grown because they have met or exceeded investors' expectations. So that is another interesting number to look at, which hardly get published.
We will definitely research on it and publish it in our forthcoming editions. But can you just shed a little bit more light on your processes part? Like how are these processes designed to deliver that kind of alpha over a long period of time?
So as I said that for a good fund house to deliver alpha in the long run, there are 4 things that are needed. One is the clarity of mandate, your investment philosophy, what you do and what you don't do. I think that must be very, very clear. Apart from what is given in the investment objective in the offer document, the way fund house looks at having a well articulated investment philosophy which stand the test of time is very, very critical. For example, at our end, we would say that an error of omission is okay, but an error of commission is something that you need to avoid. What it means is that you can miss out on some opportunities where there was large upsides, but try to restrain or try to ensure that you make as less mistakes as possible. That itself gives you a lot of opportunity. You need to have a robust research. I think our research analysts, the kind of experience they have, the processes that we have put in place, the way we would look at businesses, the way we look at the management, the way we would look at the valuations, that gives us a lot of edge. And that is what the portfolio managers bank on. Third thing you need is a robust portfolio construction. Now, I mean, you know that there is a large cap fund where you can only invest in 100 companies. This is the benchmark and all that, but different portfolio managers would be managing the portfolio differently. How, for example, by what do I mean by robust portfolio construction? How do you size up your positions? How do you ensure that you focus on the risk adjusted returns and not on maximizing returns alone? So there are several parts of the robust portfolio construction, which is the job of the fund manager. And last but not the least is the risk management, the supervision, the governance, which is deeply ingrained into the overall portfolio management. And for us, it is not an after the fact activity. It is completely ingrained into the investment management.
Got it. So, speaking of sectoral and thematic funds, should they form a part of any investor's long-term portfolio? Our research found that from the actively managed funds, the funds that rank in the top 10 positions in a 3-year period, they do not even rank in the top 100 positions in a subsequent 3-year period. So should these funds, sectoral and thematic funds, form a part of an investor's long-term portfolio?
I think the large part of the investor's portfolio should be in diversified equity fund. That's my strong belief. You can have what is called like a core and satellite portfolio. So the core part must be in diversified equity fund. Funds like, let's say, a FlexiCap fund or a multi-cap fund or a large cap fund, so on and so forth. You can have a small proportion of your investments in sector and thematic if you really understand that space well and you have the risk appetite, because the risk is relatively higher in sector and thematic fund than what it is in the diversified equity funds. Again, with sector and thematic is a very broad category. Within that you have many kinds of funds. You may have funds which are very narrow in terms of the investment universe, and then there are sector and thematic funds which are quite broad in terms of investment universe. So let's say if you have an innovation fund or a business cycle fund, the investment universe is quite large, versus let's say a defense fund, it will have a narrow investment universe, and you need to have a very strong view on that particular sector and must look at the overall investment universe, the valuations, etc. Your point on like every 3 years you will see that funds changing, obviously, because at different points in time different sectors would do well, and that's why I mentioned that a larger proportion of investors' portfolio should be in diversified equity funds.
Got it. Speaking of passive funds, they have crossed more than 25% of the total industry's AUM. How is HDFC AMC banking on this wave of increasing passive investments in investors' portfolios?
Yeah. So we want to be the one-stop solution place for all kinds of investors and all kinds of advisors and distributors. We have the full product bouquet wherever we think that we have the investment capability, the product capability, risk management capability, and we believe that there is a place, at least in a segment of investors and distributors, for that product. Wherever these two things match, we would have an offering for our investors. So while we have an outstanding track record of generating alpha in our active funds, where also we have the full bouquet of products, we have also launched many passive funds. In fact, one of the index funds were launched almost 22 or 23 years back. So we were one of the earliest in the passive fund management also. So our products in like Nifty fund or Sensex fund would go back a long time. Over the last couple of years, as investors have shown more interest in taking exposure to passive funds, we have launched many products across market cap based indices as well as the smart beta. We have launched products on the ETF side as well as on the index fund side. We have launched products both in fixed income as well as in equity.
Right. Since we spoke about multi-cap funds, what is your view on multi-asset funds? Are they good enough for an investor, and should it be the fund manager's call to take a view on the asset allocation of an investor, or should he or she be managing only the asset mandate that has been given to him or her?
So I mean, it depends on an investor or an advisor. As I said, that the mutual fund job is to provide the best possible solutions to the investors and distributors, and depending on each investor's needs, each investor's circumstances, each investor's risk profiling, an advisor or a distributor would decide what kind of product that the end investor is looking at. Multi-asset is an interesting category because in one single fund you get exposure to equity, fixed income and gold, and the fund manager can also take exposures to, let's say, asset classes like REITs and InvITs. So in one single product you get exposure to multiple asset classes, and it's a diversified portfolio which gives you a total market exposure.
The fund manager is taking call on behalf of a lot of investors, right?
Absolutely.
My need towards gold could be higher than, say, someone else.
Absolutely.
Then if they're investing...
That is precisely, I said that each investor would be different. Yeah. And it is between the investor and the advisor, or if investor is doing himself or herself, then they can decide. If you want to have higher exposure to gold relative to what the fund manager is taking in multi-asset, of course you can do that on your own with an advisor. Yeah.
Got it. Speaking of SIFs, can you explain exactly what this product is and for which investor class is this for?
So over the years, market regulator has ensured that there are product categories which suit different investors' needs, and so we have mutual funds where somebody can start its journey as low as with 100 rupees per month. So in HDFC AMC, most of our equity funds, you can start with as low as rupees 100 per month. Then you have a portfolio management scheme, segregated accounts for investors who have a minimum 5 million or 50 lakh rupees to invest. Then you have alternative investment fund across category 1, 2, 3, where you have a minimum amount of 1 crore. Somewhere between the PMS and AIF and the mutual fund, a new category has been envisaged. This is the Specialized Investment Fund, SIF, where the minimum amount is 10 lakh rupees, and regulator has come out with certain categories of fund which can be taken as relatively higher risk and potential for higher returns because you are taking higher risk, and that risk can come in various forms, and the portfolio may be more concentrated than the way a portfolio of mutual fund would be. SIF portfolio can take higher exposure to derivatives. It can have short positions in stocks which a mutual fund wouldn't have. So it is a high risk, high return category for an investor who's willing to put more than 10 lakh rupees. So this is envisaged for a investor somewhere between PMS and the mutual fund.
Or should we say that between AIF and mutual fund, because PMS are anyways not...
Yeah, exactly. So PMS and AIF I'm putting, let's say, in one bucket, which are above 50 lakh rupees of minimum investments, and this is mutual fund is for any investor with any amount. Yeah.
Speaking of Gift City funds, the first fund has been launched for retail investors with a minimum ticket size of $5,000 US. Should retail investors dabble into Gift City funds, considering that if redemption pressure comes, then a 42% short-term capital gains tax can be levied at the fund level?
Again, that depends on each investor. An investor who wants to take an exposure to international markets, currently because mutual funds have limited avenue to offer those products, Gift City can be a route for those, but again that will depend on each and every investor. At HDFC AMC, we were among the earlier ones to set up a wholly owned subsidiary in Gift City, and we thought of two opportunities. One is for the global investors to access Indian markets. So we have already launched a couple of products for the global investors, which also include NRI investors to access Indian markets through our products there. And over a period of time, we will also have products for domestic investors to access global markets in the best possible way.
So HDFC AMC is planning to come up with, of course, through its subsidiaries, to come up with the retail fund in the Gift City?
For domestic investors to invest in global markets also, we are working on that, yes.
Got it. Why do NRIs need to invest through Gift City and not directly in mutual funds or other products in India?
I think different investors would have different kinds of needs. They can compare their ability to invest in the local funds versus the funds in the Gift City. In Gift City, you are investing in US dollar. You don't need to have a separate account in India. You don't have to have the Indian, let's say, PAN number or some, a PAN account or some of those kind of things. Yeah.
So basically, regulatory complexities, easing up the regulatory complexities.
I wouldn't use the word complexity, but globally, I mean, there is a large diaspora population which for a variety of reasons wouldn't have accessed domestic funds or wouldn't have accessed the Indian markets. I think Gift City provide relatively a convenient vehicle for them to access Indian markets. Yeah.
Do you think the RBI should raise the limits for mutual funds to invest in overseas assets?
So MFI has been putting that request, but I'm sure it's RBI's prerogative. That limit was set up several years back, and at some point in time, we expect that this will be reconsidered.
I think this limit was breached in early 2022, and that hasn't been revised until now. Why do you think RBI?
Yeah, so I mean that's up to the regulator. I won't be able to comment on that.
Got it. Fair enough. So, speaking of B30 cities, how does HDFC AMC plan to scale across B30 cities and below that?
So, we have been saying for a long time that mutual funds need to be taken to the real Bharat. Over the last couple of years, we have seen huge traction in incremental flows coming in from the B30 towns, while the industry, if you look at the industry AUM, 19% of the AUM is from B30, but if you look at incremental equity flows, almost 30% of the flows are coming from B30 town. More than 40% of industry folios are from B30. More than 50% of new SIPs are coming from B30 town. So it's been expanding at a very, very decent pace. At HDFC AMC, we are deeply committed to expansion in those markets. Over the last 16 months or so, we have opened 50 new branches, 50 new offices, and there are very few AMCs who have this strong belief in opening new offices in those towns, but we have a very, very strong belief. Another thing we are doing is significant investment in our digital capability. While the percentage of transactions that get done digitally are more than 94% at our end, but despite that, we are opening new offices there because I think somewhere investor, wherever they need, or our distributors and the advisor partners who need the handholding in those markets, and for us to go and develop those markets, we think we need to invest as much in digital capability as we are doing in doing the physical expansion. So phygital is our strategy there. The many other things that we do on investor education to expand the market, that's not only restricting the growth to the HDFC AMC, but for the overall market expansion, we have been doing many things, including our famous campaign of Barni Se Azadi, that for thousands of years Indian women have been putting their savings in the kitchen jar. We are saying that now they should take the SIP route and become a better investor and not only just stay as better saver. Our other investor education campaign of Zindagi Ke Liye SIP, our SIP Saheli. So there have been many campaigns and delivering in various formats. So our big, I would say, focus has been on investor education to create more awareness, to create more empowerment in those places for the investors to bring them into the mutual fund fold. I told you about reducing the minimum amount to 100 rupees per month in the SIP in several of our products to get a lot of investors into that. And over the last several years, industry has also been making huge amount of efforts to spread the word about the importance of mutual funds for long-term financial security, for long-term wealth creation.
Great. HDFC as a group is very institutionalized, right? How at HDFC AMC do you ensure that how high-profile exits do not impact the overall business?
I think people are very important in our industry. The money is managed by the people, but ultimately it is also to be kept in mind that ultimately it is a team effort that delivers that performance. I told you about the importance of portfolio management. I told you about importance of the research team, and I told you about the importance of the risk management team. And last but not the least, the importance of the governance and the supervision and the continuing risk management that you put in place. I think that together delivers a performance, and while ultimately it's the individual's job, but at the same time it is a team, it is a fund house, it is the processes, it is a well articulated philosophy that gets institutionalized over a period of time, and that's why we have been able to deliver this performance over the last several decades.
Great. There are close to 30 lakh life insurance distributors in the life insurance space, and probably that has led to lesser awareness amongst the distributors themselves of the products. So do you think increasing the number of mutual fund distributors to that extent will contribute to mis-selling as it has in the case of life insurance products?
So if you look at the penetration, total number of mutual fund distributors would be less than 2 lakhs or so.
Yes.
Versus if I remember the number correctly, I think there are almost 35 lakhs or so of life insurance agent,
28 to 30 lakhs,
every 400-500 people, versus one mutual fund distributor or advisor for thousands of people. So I think the mutual fund distribution needs to get a lot more penetrated than what it has been so far relative to the insurance. I would say that in mutual fund industry, our focus has been delivering better track record, delivering more transparency, making it more technologically efficient, and there is tremendous focus at our end to educate our investors, enlighten our investors, empower our investors, focus on the long-term wealth creation, focus on disciplined investing. And this is what, between the regulator, industry body, and all the ecosystem players, the mutual funds like us, our distributors, our partners, people like you, all of you are working hard that how do we deliver the best possible solution to the end investor. And this is what, if we keep doing, I don't think we need to worry too much about the other things. There is a need for this product in each and every investor's portfolio, in each and every household. They need a mutual fund product. In India, I mean, if you look at the population, if you look at the number of people who got the bank account, if you look at the number of people who got an PAN account, if you look at the number of people who have internet connection, number of people who have a vehicle ownership, number of people who have a passport, number of people who have a demat account, and compare that number with the number of people who have mutual funds, we have a long way to go. We have grown a lot over the last couple of years, but still we have a lot more to penetrate over the next several years. So there is tremendous opportunity for us. I think our job is to ensure that we deliver the best possible experience for our end investors, and we just need to remain single-mindedly focused. I think Jeff Bezos or someone said that focus on the customer and not so much on the competition.
Got it. So equity mutual funds are largely products which are suited for 5 to 7 plus years of horizon. Why do investors still, exit within 2 to 3 years more? Like there was a recent SEBI consultation paper on total expense ratio, which highlighted that most investors, I think 97% of regular mutual fund schemes get redeemed within a period of 5 years. Why is that happening?
So the heartening point is that the longevity is increasing, and within that, the longevity of regular plan is higher than the direct plan. So maybe there's like do-it-yourself investors who are experimenting, who are going through the learning curve. But if you look at the regular plan, that percentage is higher than the direct plan. The other thing, if you compare the longevity of investors owning a fund for more than 1 year, more than 3 years, more than 5 years, across all of these periods, if you look at that number in 2019 and if you look at this number today, over the last 5-6 years, the longevity has been increasing, and that is something even at HDFC AMC we focus a lot more. We keep talking about the long-term track record of our funds for 25-30 years, but we also keep seeing that are the investors also generating that alpha? Are the investors also making the most of it? Are they staying with us through market cycles, through business cycles? And it's very, very important that we have more longevity. We take pride that relatively we have more number of those customers who have stayed with us for longer, but I think over the next 20-30 years, the opportunity for us is to deliver that great experience to as many investors as possible. So longevity has been improving. We have a long way to go.
Got it. So there's one mutual fund which recently told that we have been in this particular fund has been in existence for more than 30 years and we have delivered more than 20% annualized returns. But only 23 investors stayed with us from the very beginning. Do you have any such data for HDFC FlexiCap Fund?
I don't have this handy as of now, but all I would say is that over the last couple of years, there is significant improvement in the longevity of the investors. In fact, MFI has published that handbook. If I remember, I think in the month of March, you can look at that data, that how the longevity is increasing. But are we there yet? Not really. I think we have a long way to go. And this is where the focus of fund houses like ours, this is where the focus of MFI as an industry body to create more awareness that wealth is created by staying in the fund for a very long period of time. I think people still underestimate the importance of longevity. They underestimate the importance of lifestyle inflation, the way it's increasing, and over a period of time their needs are increasing. So they need to stay for longer term to make the most of their investments and create a financial security.
So what should the industry as a whole do to improve this awareness?
That is precisely, if you look at our entire campaign as an industry and if you look at what we are doing, in last 1 year we would have done probably 3,500 or so investor education camps. You look at all our other programs on the digital side to reach out to more and more investors. The conversation that we are having today is they are all geared towards keep reiterating that the formula for wealth creation in the long run is sound investment plus time plus patience. And you have to ensure that you make right investment, you stay with that for long term, and you remain very patient.
Got it. So since we are speaking of
stock market is a place where money moves from impatient to the patient.
Like Warren Buffett says that during bear markets, stocks return to their rightful owners.
Absolutely.
So if you're speaking about the last 2 years, do you think is it because of lesser drawdowns? If we see a 20%, 30% drawdown and that has to stay for 6 months and a 1 year period, do you think this ratio will again get back to its normal?
I think the good part is that thanks to industry's efforts, thanks to efforts by people like you and of course the people like let's say AMC like ours, the awareness of longevity has gone up substantially. And if you look at, I give you one data point, that our SIP amount for the industry as a whole was around 4,000 crores in 2017. And today that has become almost 26,600 crores. And in this period, we have seen multiple drawdowns, right? I mean, you had the 2020 pandemic where market fell almost 30% or so within few weeks in the month of March. We have seen drawdown in 2022. We have seen a lot of volatility in between. But I think the investors, more and more investors are understanding the importance of long-term investing and disciplined investing through SIPs. So that's heartening. Retail investors are showing more maturity in terms of if we see the flows in the months where there have been higher volatility or let's say there have been drawdown. I've seen days when market fall and I see higher number of purchase transaction in those days. That wasn't the case in the industry till few years back.
That's true. Since we are speaking of such long-term horizons, do you think mutual funds or as mandated by SEBI, should the 1 year and the 3 year period returns be disclosed, or should the 5 year or 7 year returns only be disclosed?
I think our industry has always focused on greater and greater transparency, and that's why you get the returns for 1, 3, 5, 10 since inception, and several of our funds at HDFC have a much longer term track record. And at the same time, we also keep mentioning that past returns are no indication or no guarantee of the future returns. But having said that, I think investors take the informed decision by looking at returns across all time periods. But it should not be the returns alone. As we discussed earlier, I think they need to look at the fund house track record, they need to look at fund manager track record, they need to look at the overall investment process, investment philosophy, the risk management, the culture of the organization, the pedigree of the organization. I think those are as much important and should not focus just on one single number. You're putting your life savings, you're investing for decades, not years or months, and an investor should take a very informed decision. Yeah.
Got it. Which are some sunrise sectors that HDFC AMC is betting on, or which you are personally very bullish about?
So, I mean, our portfolios are in public domain, so one can see where our different fund managers have invested. The way I would answer this is that if you look at India today, we are less than $4 trillion of economy, and we are going to become substantially larger over the next 25 years, and there are going to be opportunity in many spheres. We are at $2,500 per capita on consumption. Over a period of time, this number is going to increase very substantially. This is a young aspirational population. If you look at on the manufacturing side, I think India has tremendous opportunity from China plus one, from the supportive policies by the government, and of course what's happening in global geopolitics and the supply chain diversification. India is an economy where it is not just the few companies or few sectors. I think India is an economy where there are multiple opportunities across sectors. If you look at financialization of savings, we are at a very, very early stage. If you look at on the digitalization, the digital public infrastructure that India has created, and Indians are digitally aware, Indians are digitally enabled, there are going to be many opportunities for many businesses who innovate rightly. Over the next several years, I think it's more important to look for companies where they have the nimbleness, they have the agility, and they are trying to make the most of all of these structural opportunities that's coming our way, rather than focusing in a very narrow manner on a particular sector or segment. I think that there are opportunities across many sectors. What's more important is identifying the right business run by the management who has that nimbleness and agility and deliver value to all the stakeholders.
Do you think premiumization and discretionary consumption as a theme has a risk because of HNIs moving out of India?
I mean, what percentage of population is moving out of India? Hardly. Some of these things get highly exaggerated. Over the last couple of weeks, one interesting trend I'm observing is the number of people who are applying to me who want to move from outside India to India.
Okay.
They can see the growth of the mutual fund industry in India. They can see the growth of the markets in India versus many other places. And I'm sure over the next several years, you will also have a trend where a lot of Indians would like to move back to India. This is where the opportunity is. This is the country which over the next 25 years is going to grow manyfold. We will remain the fastest growing economy, fastest growing major economy in the world for the foreseeable future. I think anybody who's willing to put that hard work, and there are going to be a lot of opportunities in India, and that will also create opportunities for many businesses to leverage on that. Yeah.
So you think this is largely noise and not anything of substance?
I mean, whatever, I don't know what that number is, but that's overall relative to the population is very, very tiny.
Even the HNI
for
population?
every family who would be moving out for a variety of reasons, there are many families who are working very hard and creating wealth not only for themselves but for larger masses in India and for the country as a whole. Yeah. There is this famous quote that I think I would remind everyone: ask not what my country can do for me, ask what you can do for your country. And as our Prime Minister always says, which people remember only the first part, Sabka Saath, Sabka Vikas, Sabka Vishwas, but the last part is very important, Sabka Prayas. I think all of us also have to make that effort, and to become the Viksit Bharat, every individual has to make that effort to be a Viksit Bharat, because then everybody would be a beneficiary. Collectively, we are creating history. So if few people are giving up, I don't think we should get too excessively worried about that.
Got it. Fair enough. Speaking of professionals who work in their day jobs or their businesses, should they be dabbling into direct stock investing?
I think the way I would put it is that the mutual fund product, given the professional fund management, the advantage of diversification, the convenience you have, the liquidity they provide, and the regulation, which in India has been, I think, exemplary, and the value it creates for the investor, I think that's the most convenient and the best way to create a portfolio to take market exposure, and I think it has a huge space in the overall financial planning for each and every individual, for each and every household. Now, if some investors believe that they can do better by investing directly, of course, they need to work a lot harder.
Coming to our last question, our audience largely consists of financial advisors, be it RIAs or top few MFTs and others. What is your piece of advice to these advisors as to how they should be advising their clients and customers?
So the first, which we discussed some time back, I mean, reminding the Jeff Bezos quote that focus on the customer. Keep always customers' interest at the center. If you have purpose at the center in everything you are doing, you will be very successful. The other important thing is thinking long term. This is a profession, this is a business where, as we discussed earlier, that money moves from impatient to the patient. Same is true for the professional who are working in this industry, that you need to think long term. What you are advising your client, that's true for your business also. So think long term, think trust, building trust of the investor, and think technology. That's going to be very, very important. And now with the AI and the other digital transformations, there is tremendous opportunity for you to serve your investors better, to engage better with them, and to expand your business. So, okay, I've created this now. There is an acronym. So, time. So, think long term, trust, build trust with your investors, and leverage technology.
Got it. Thank you so much. Any closing note that you have?
No, as I mentioned earlier, the formula to create wealth is sound investment plus time plus patience. And it's very, very important that investors keep that in mind.
I must say this was a very insightful conversation, and really thankful that you accepted it.
Entirely my pleasure, Karan. Thank you.
Thank you so much. Thank you so much.